Saturday, November 23rd. Last week or the week before that, I was asked about how we qualify liquidity when I'm talking about liquidity changes in chat. So I talked to Sean and we turned on the indicator that we use. This is, I hesitate to call it a technical indicator, but I guess it's a technical indicator, but this is the only thing that we actually use. It doesn't have a name. I'm just calling it Bob. I don't really have an idea of what to call it yet, but I brought up AALK here. This is a stock that I don't own. I don't believe anyone in chat owns this, so I was just going to talk about this one since it shows both ways that this indicator can work. Now, when you're talking about liquidity, you really only can see it when it changes. So you can see it when liquidity goes up, i.e. like someone who had been holding shares just dumps them into the market, or you can see it when it goes down, which is when someone buys shares off the market, which they don't actually intend on reselling anytime soon. So here in AALK, you can see back in April, Bob tripped, and then right after Bob tripped, the stock actually steadily fell off and stayed down for a while. Okay, so we would suppose that this is a liquidity increase where someone sold or shorted. Okay, the fact that it rebounded is probably related to volume changes that occurred afterwards, but Bob actually only tripped here. Now, just recently, Bob tripped in a way that's very easy to understand. So right here, Bob tripped, and since then the stock has gone up, and an institution filed a 13G. So we know what this liquidity in the middle of October was. It was the action that caused this 13G to be filed. So that's pretty clear cut here as to what happened. One of the ones that I talked about in the Substack, which I'll go into a little bit more detail here, is CDTX. So in this particular case, you had Bob tripping at the FDA decision. That's pretty obvious. The stock sold off. Whatever the FDA decision was, someone was selling. That's what tripped Bob. It then tripped again. This is probably related either to someone trying to catch a bounce, or it could have been further selling with more detail comes out. I can't explain that. But when you look back in time on the chart, you have to remember that these charts are very up to date. So if you go back and look at April's time frame, you're going to have to look at a chart closer to the time frame to understand what the conditions were when Bob tripped. So if we look at the historical charts for CDTX, go back here. You can see that at the time of the FDA decision, the price was actually above the bands. Now remember, buying pressure will increase as you go below the bands, and selling pressure increases as you go above. So from that perspective, you can understand more of why, I should have just left that open. You can understand more of why this was likely selling and like logically why people would be selling. Now, if you look over the last couple months, you can see that Bob has tripped numerous times here, and that right before the really big run here, it tripped again. So it's tripped 3 times in the last couple months. Now, I did not notice this. I would have most certainly bought this stock this summer had I not been sort of sitting on the sidelines waiting out both interest rates and the election. This was an obvious thing to trade. And the reason why this is so important for us is that you notice that 2 days ago, Sedera actually announced that they're sort of starting over. They basically did a new pipe deal. They got $105 million where they sold 4 million shares. So this company is in the process of just going through a new clinical trial cycle. And whoever was causing the liquidity changes here in the last couple of months obviously had some understanding that that was going to happen, or they were believing it was going to happen and they were sort of trying to front run the news. And this move here from 10 to 20, you're talking 100% move in less than a month. And if you had bought back in July, you're talking about, you would have taken a drawdown of maybe 20-25% to make 80% in 4 months. So that's what Bob is. Now, one of the things to understand here is that Bob is rare. Okay, you're talking there's maybe 100 events since June, so in 6 months. And the segment that I screened when I did that data analysis, I was probably hitting maybe 1,800 stocks. So you got 1,800 times half a year's trading, so 120 days or so, and it tripped 100 times. So that's, that sort of shows you how infrequent this actually happens. One of the stocks that you guys were talking about on Friday was DTIL in chat. So I'll bring this one up. We actually do own this. I personally own it, and it's actually in our fund account. So DTIL has tripped just once. It hasn't tripped recently. Even though there was a volume change, this volume change was likely that 13G. The way that they made that change did not actually trip our liquidity indicator. So, but it did trip back here, which looks like it's late October of 2023. And the stock did move a little bit, but not a lot. But as you can see, the stock has been basically flat the entire time. So there is, the stock that you guys were just recently talking about. So I hope that answers your questions. If you have any other ones, just ask me in chat, and I'll try to answer them. All right, have a good weekend, guys.